Welcome to Explain the Charts, where today, September 22nd, 2025, we're bringing you an in-depth analysis of the NZDUSD currency pair. We'll start by examining the fundamental news shaping this market, then dive deep into the technical charts across multiple timeframes. On the news front, the New Zealand dollar, or Kiwi, is facing significant headwinds. New Zealand's economy contracted by 0.9% in Q2, which was worse than expected, and their August trade deficit shrank, with both exports and imports declining. These weak economic indicators suggest the Reserve Bank of New Zealand may be pressured towards a more accommodative monetary policy. Conversely, the US dollar has shown resilience, extending its rebound against major currencies. Recent U.S. jobs market data indicated strength, with a sharp drop in jobless claims, reinforcing a robust labor market. While the Federal Reserve did cut rates by 25 basis points, the market had anticipated an even more aggressive dovish stance than what was delivered. This discrepancy, combined with positive jobs figures, has allowed the dollar to find its footing, putting further pressure on pairs like NZDUSD. FX Street reported on Friday that NZDUSD remained below 0.5900, trading around 0.5880, marking its third consecutive day of losses. This gives us a strong fundamental backdrop for the technical analysis we're about to conduct. Now, let's turn our attention to the daily chart of NZDUSD to see how these fundamentals translate into price action. Observing the full range of data, we can see periods of significant volatility, particularly those exceptionally sharp drops in late 2024 and early 2025, which appear to be anomalous data points or extreme market events. Focusing on the more recent and consistent price action from May 2025 onwards, the pair had a peak around 0.605 in early June before establishing a clear downtrend. This sustained downward pressure aligns perfectly with the recent news of New Zealand's economic struggles. We can see the price attempting to hold a key support level, which is becoming increasingly critical. Let's zoom into the 1-hour chart to analyze the intermediate trends. Looking at the period from early September 2025, the downtrend is quite evident. The price has seen several bounces, but generally failed to sustain moves above previous resistance levels. Notice how the rallies are often quickly sold off, indicating strong bearish sentiment dominating this time frame. This continued weakness is a direct reflection of the contrasting economic narratives between the US and New Zealand. The 0.5900 level, which the news mentioned the pair remaining below, acts as a significant psychological and technical resistance point on this chart. Now, let's get granular on the 15-minute chart to identify specific areas of interest and immediate price action. We're looking at the recent candles from mid-September, where the downward pressure is consistently visible. Observe this particular range on September 17, 2025, around 22:38 Universal Time Coordinated. The market saw a notable drop from an open of 0.59632 to a close of 0.59431 within just 15 minutes, highlighting acute selling pressure. Such sharp moves often follow news catalysts or signify an increase in bearish momentum taking hold. The price then continued to face hurdles in regaining lost ground, confirming the overall negative sentiment. This rapid decline underscores the volatility and the strong immediate bearish bias the market is currently exhibiting. Returning to the daily chart, we can now see the confluence of factors at play. The immediate key price level to watch is the 0.5850 support, which has been tested multiple times in August and September 2025. A sustained break below this level would signal further downside potential, possibly targeting 0.5800 as the next psychological support. On the upside, the 0.5900 level, as reported in the news, serves as an immediate resistance. Overcoming this would be the first sign of a potential reversal, but stronger resistance lies at the 0.5950 area, a previous support turned resistance. For short-term traders, opening positions with tight stop losses just above 0.5900 for bearish trades, or just below 0.5850 for bullish reversal plays, is crucial. Volume can provide confirmation, with higher volume on breakouts or breakdowns indicating stronger conviction. Looking at the short term, the NZDUSD appears bearish as long as it remains below the 0.5900 mark, with the immediate support at 0.5850 under constant threat. Reasons to be bearish include the ongoing weakness in New Zealand's economic data and the relative strength of the US dollar fueled by solid jobs figures. A break below 0.5850 is highly likely, perhaps 70% probability. If upcoming NZ economic data disappoints further, or if the U.S. Federal Reserve maintains its slightly less dovish stance than market expectations, pushing the pair towards 0.5800. Conversely, a short-term bullish reversal, perhaps a 30% probability, could occur if the dollar's recovery is dented by genuinely dovish Fed speak or weaker U.S. personal consumption expenditures data, leading to a bounce from the 0.5850 support. Such a rebound would need significant buying volume and a clear close above 0.5880 to gain traction. Long-term, the trend will be dictated by the divergent monetary policies of the RBNZ and the Fed, as well as the health of the global economy and New Zealand's trading partners like China. Keep an eye on any unexpected shifts in central bank rhetoric or significant economic data releases from either nation, as these will be the primary drivers for future price movements. Remember, trading involves risk, and these analyses are for informational purposes only. Always conduct your own research and manage your risk diligently. Thank you for watching Explain the Charts.